Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. I would like to request my viewers to subscribe my channel and to see the playlist section of the channel where I have uploaded lectures on different topics of commerce. I have created this channel for the benefits of the students pursuing commerce who are not in a position to take private tuition but want to have access to quality education. Please give your valuable comments and student can communicate with me through email which I have given in the description box. Today I am going to discuss another problem on consignment account, and the goods are sent by the consignor to the consignee at an invoice price. This is lecture number 5 and you can see the previous 4 lectures in the playlist section of the channel. On 1st January 2020, Leela and Company of Kolkata consigned 100 cases of milk powder to Sheela and Company of Dhaka. The goods were charged at a pro forma invoice value of Rs 10,000, including a profit of 25% on invoice price. On the same date, the consignors paid Rs 600 for freight and insurance. On 15th January, the consignees paid import duty Rs 1,000. Dock dues Rs 200 and sent to the consignors a bank draft for Rs 4,000 at advance. On 31st December, they sold 80 cases for Rs 10,500 and sent a remittance for the balance due to the consignors after deducting commission at 5% on gross sale proceeds. So ledger accounts in the consignor's book. Here I have prepared the structure of consignment account, and we are preparing these 2 ledgers in the books of consignor, and the name of the consignor is Leela and Company. So in the books of Leela and Company, who is the consignor, we have to prepare the 2 ledger, consignment account and the consignee account, and the name of the consignee is Leela and Company account. On 1st January 2020, goods are sent to consignment. So we are writing here to goods sent on consignment account, and the invoice price of the goods sent on consignment is Rs 10,000. So on the credit side, we have to write the unrealized profit, that is by goods sent on consignment account, and this is the load that has been charged on cost. So what is the load that has been included in the cost? Let me explain that cost price plus load is equal to invoice price. So this is the cost price, and then there is a load is charged on cost to arrive at invoice price. So the invoice price is given at 10,000 and it is said in the question that the load is 25% on invoice price. So 2,500 is the load that is included in the invoice price of 10,000. Now on the same date, the consignor paid freight and insurance of Rs 600. So I am writing here 2 bank account, freight and insurance Rs 600. Now it is said that on 15th January, the goods were received by Sheela and Company and they have paid some amount towards import duty and dock due. So I am writing here consignment to Dhaka account debit to Sheela and Company account, and the amount that has been paid is for import duty for Rs 1,000 and dock dues Rs 200. And on the same date, 4,000 has been remitted by Sheela and Company as an advance to consignor. So here I am writing in Sheela and Company ledger on 15th January 20 by consignment account Rs 1,200. This is the expense that they have incurred, and by bank account 4,000. This is the advance they have remitted. Now at the end of the year, it is given that the value of goods sold by consignee is for Rs 10,500. So in consignment to Dhaka account, I am writing by Sila and Company account. This is the sale proceeds. And the amount of sale proceed is 10,500. So in Sila and Company ledger or Sila and Company ledger, I am writing on 31st December 20 to consignment account 10,500. It is given that Sila and Company is entitled to 5% commission. So on 31st December 20, I am writing to Sila and Company account amount of commission, which is 5% of sale proceed, that is 5% of 10,500, and the amount is 525. In Sila and Company ledger, I am writing on 31st December 20 by consignment account 525. Now we have to value the amount of closing stock. Here I am doing a small working and I am writing working note number 1, valuation of closing stock. So it is said that 100 cases of milk has been consigned to Dhaka, and out of 100 cases, 80 cases were sold by consignee. So 20 cases were remaining with consignee. So invoice price of 20 cases is 20 by 100 into 10,000 rupees. So this is rupees 2,000. Add proportionate expense of consignor, which is 20 by 100 into 600 rupees. So this comes to 120. Add non-recurring proportionate expense of consignee. Now you can see that both the import duty and dock dues are non-recurring expense. So I am writing 20 by 100 into 1200. So this is equal to 240. So the invoice price of closing stock is 2,360. Now in this rupees 2,000, which is valued at invoice price, so we have to calculate the amount of stock reserve. So stock reserve is equal to 25% into 2,000 rupees, which comes to rupees 500. So in consignment account, I will write on 31st December 20 by consignment stock account, I am writing 2,360, and on the debit side we will write the stock reserve. So stock reserve is the load on this closing stock. The amount of load which is included in the closing stock is rupees 500, and I have shown you the working. And now it's time to calculate the amount of profit on consignment. You can see that on the credit side I have written three figures: 2,500, 10,500 and 2,360. So total of credit side is 15,360. So I am writing on the debit side also 15,360, and you will get a balancing figure for rupees 2,535, which is profit on consignment. So this is the amount of profit on consignment. Now you need to close the consignee account, and on 31st December 20 it is said that consignee has remitted the balance due through bank draft, and the amount is 4,775, which is the balancing figure. This is the balancing figure. And the debit side and credit side total is 10,500. So in this problem, the goods are sent by the consignor to consignee at an invoice price. So there are two adjustments. One is on the goods sent on consignment. So whatever load is charged on the goods sent on consignment, you need to write it on the credit side, and you have to calculate what is the amount of load. And the stock reserve is written in the consignment account, and the amount of load in the closing stock I have to calculate. So whatever load is there in the closing stock, you need to write on the debit side as stock reserve. Thank you. Thanks for watching the lecture.